Welcome to the Tuesday report. We've got Gary Glover's detailed report of industry analysis and then also his favourite opportunities on the ASX at the moment. This report came out to his clients and those who have subscribed with him with a cautionary note, a very short cautionary note, which has me somewhat cautious. And I want to say good morning to Gary and say, good morning, how are you in this cautious market?
I'm good. I have
Why cautious?
we're just getting pretty vertical for one thing, but second thing is also the there's a cycle we're in as well. So we've been sort of following the cycles this year, so following the post-election year cycles and also the typical fifth year sort of cycle to a T. But in the last couple of months, we've started to drift away from that the dominant cycle, and so sometimes you can run, it sounds funny, but this sort of October has been a lot of, we've had a lot of lows. So October 22, October 23, just a lot of lows in October, even going back historically as well. So it's normally a period where you would sort of see some sort of consolidation, some sort of weakness into that window, and then build out of that. So it's a little bit of a concern if we're running up into that window. And one thing which can happen with the cycles, Chris, is you can get what they call it. So the cycles can invert. So you can, potentially find a high early. If you invert into one of those, what would normally be a low, you can run up into a high here. So just got to be a little cautious there. And there's probably reasons to be cautious as well. Like one of the things, as much as we've got the AI, which is is like a sugar hit for the market. And then what it does is, companies can sort of lay people off and get it done cheaply and more effectively. And then maybe that hits the bottom line. So it gives you some companies that earnings hit. And we've seen probably some of the biggest companies do that. And that's probably giving them an earnings hit there. But then if the unemployment rate starts to increase, then there's less people
And they wear it on the other side.
Yeah. So
month later.
Yeah. So that does take a little while to filter through here, but that, again, the market will look forward and start to sort of see that as well. So that's the one thing that's sort of pretty, all the AI experts that's the one thing which they're not
touting right now.
Was one thing they're not arguing against. So there's a lot of unknowns in what AI does. The one thing that all the experts are disagreeing with is there's going to be lots of layoffs. They're all on that page. So that's, that unemployment rate. I mean, we've had, inflation's been pretty important the last couple of years. I think in the next couple of years, the unemployment rate could be the one that we're really focused on. So just a few concerns here moving forward. And look, valuations are pretty high. We're seeing all the different ways you typically value companies. And we're sort of seeing that, we're seeing plenty of those classic signs there, Chris, where we're not seeing market breadth. We're seeing, the leaders do all the heavy lifting here. We're seeing heaps of sort of slides there about the Mag 7 accounting for, a large percentage of the gains, where the rest of the market's not really had the gains. So so you can they can start to play ball and then lift you up, or what normally is, is that the leaders sort of will do the heavy lifting at the end, which is quite common in your sort of seeds at top. So we just got a few of those classic signs and a few things to possibly watch here moving forward. But no doubt this market's got some momentum, so it could go a bit higher here, but I'm just being a little cautious here. I think we've got two really important time windows here. We've got the Equinox, which is today. That has turned a few markets there. So probably we go back and look at the last probably 6 years, I'd say probably 2 or 3 of those years we've seen turns on those Equinox dates and been quite meaningful. So we could get a meaningful turn here. But the big one is that October, that first over there. And that it does match up pretty well with the first week of April low. Because normally you might run like a quarter year or half year sort of cycle. So if we project forward from that first week of April low, that gives us the first week of October high potentially. And just October typically doesn't end up being a high. It's typically like market typically pulls back into that low here. So we could just don't want to see those typically big lows in the past and this be a high here, because that can be like how some of these cycles do end. So just a few alarm bells kind of ringing for me at the moment. So just got to be a little cautious here ahead here. So yeah.
I like how you mentioned the same thing that the RBA governor, the RBA board, and also the Fed have talked about, which is focusing on employment. It's not so much inflation that they're concerned about now. That's exactly what you're talking about. And I couldn't help but smile when you were talking about the AI taking over job redundancies and so on. That was only 2-3 weeks ago. The CBA were talking about the success of their AI chatbot and replacing staff that weren't required. And then quietly, but not so quietly in the end, there was a report that came out and said, actually, the AI chatbots created more work, and all the staff that have been told they're redundant now have been working overtime into the lead up of their redundancy to make up for the extra questions coming from the AI chatbot. So I couldn't help but chuckle about that. As we're talking about the banks rotating, you're talking about the market leaders sort of narrowing, which is typical of market highs. We have a narrowing breadth. So all of that, putting that in together, I guess when you're looking at the April to October, which you highlighted, that's a general seasonal time. Is there anything specific on the NASDAQ chart that you've got in this week's report, or that's really that 200% expansion that we talked about in great detail last week? We've now surpassed that.
Yeah.
And this is fitting into that same concern.
Yeah, like if you go back and look at probably more so the S&P 500, that's sort of hit those expansion levels all the way through from the 0709 level. But it typically does happen as well here. And we did get a reaction at quite a few of the other levels here, but the NASDAQ has just brushed off the 200% expansion level, just gone straight through it. So it says this market's got some momentum here. The short-term wise here, you have to look at sort of similar sort of cycles there, where you do have that sort of sharp pullback and then a sharp recovery. Normally the markets haven't gone past the 150, Chris. That's like normally that 138.2 or the 150 is kind of what ends those moves. So the NASDAQ is pretty close to the 150, 22,834, I think it is, might be on that expansion, just that April pullback. You expand that up there. So yeah, so in the past there, when you've had that pretty sharp pullback and then big recovery there, yeah. So, like a lot of trends have ended on that 138.2. I mean, some have gone as far as 150 before they've ended. So we're just kind of hitting those levels a little too fast here. But look, no doubt market's got some momentum behind it. So, but yeah, just getting a little stretched to mind here. So I was just kind of wary on. I was really hoping the market would have pulled back. Yeah, I mean, the XRO has pulled back. We've sort of gone through the name. We appear to be sort of following the cycle. So we've had a little bit of a breather, pulling back into the range here. But the US indices have sort of rolled off here. I mean, like if you look at we've broken below the 50-day moving average on the daily. So typically you'd pull back and sit on top of the previous high, and then you might build on that. So the XJO is kind of following that sort of typical cycle here. So yeah, but just be interesting to see. I just look at the end of the day, the reality is the S&P 500 and the Dow and the NASDAQ there are pretty strong here. They've got some pretty strong momentum there. Just getting a little vertical, that's my main concern here. We're hitting, the Equinox and also that first week of October are just sort of timings to be wary of there. That's typically how you're coming up. And I just don't like the fact that we're possibly going to invert this cycle, which is a bit of a concern.
And just before we move to the individual shares, with that in mind, the overarching cycles, we've got Dow Jones and Russell, S&P 500, NASDAQ, all up near their highs. Hasn't happened for a long time, where they're all pushing at the same time, coming into the equinox, and then the possible inversion into the October period, which so many lows have been found in October. It would be a fast movement to get us into those lows, to undercut the April lows, but we've seen stranger things. Just on the
I mean, if you look at those longer term cycles there, just in terms of how long bull markets typically run for, and then how long they, so I think I was looking at this sort of probably 2 or 3 weeks ago. That was when the S&P was up about 88%, over the last 35 months since the October 22 low. Now the medium bull market, which I saw someone post there, was talking about 30 months and say 90% gain. So we're well past in terms of length. So we're basically past the median length. But we are now past the median gain as well. So it doesn't mean, we can obviously push further. That's just the medium there. But it does sort of show that, we are now into above average territory for length and for percentage gain as well. So that's probably the concern there. So yeah, just got to be, a little cautious here with that level of extension there.
All right. So cautious into that movement, big solid gain, and portfolio-wise allocation. You're still invested in this market. We will talk through the individual opportunities in a second, but how heavily invested or how much cash are you holding on those portfolios, given what you've just walked us through?
Yeah, look, the model portfolio is really scaled back here. So I still have clients that got positions there. I've probably started to do a little bit of hedging as well. But it's typically I've been trying to write a few calls there, which I've been doing. Strange actually last month where I was rolling puts and all the calls were expiring, which is strange because the market's sort of pretty close to all-time highs. So, but it's a really fragmented market there as well. Yeah, some sectors are a bit weak here. Some are pretty strong and flying here. So, but it is, I'm still sort of actively writing calls against sort of stocks that are running pretty strong. So, and I've been trying to take money out of the market and put money in personally as well. So, yeah, you just got to be cautious here, I think. So just, so the model portfolio is probably more aggressively in cash here now. So, so just, if anything, I'm probably able to put a few shorts on here is the way I'm viewing this market currently.
Okay, well, first in your portfolio at the individual shares, you've got NAB right up at the top, and you've got, could be a major sell level for this stock. So I imagine portfolios, we're looking at calls, more aggressive, maybe looking at shorts, and you've got, I think it's a fib fan or something like that. So what's jumping out to you in this chart, the weekly chart for NAB?
Yeah, so sort of showed last week, Chris, that NAB had expanded, like a big expanded flat. So sort of after having it sort of, 07 move and have a massive pullback, it's now expanded. I think it basically expanded to a new low there in that 20, that COVID low. And now it's expanded to a new high there as well. So we've sort of seen those expanded ranges here in recent years. And that's kind of where the trends have sort of ended on the downside, and they've ended on the upside as well. So we've expanded both ways here, which is how these ranges typically come to an end. So just looking under the hood here, just looking at those moves there. So one thing we often see with the index is that we can see the last leg of the index might be like 50% of the entire range. And sometimes, like I noticed with the banks, the last leg can be like 61.8% of the last range. So it can be, we're talking about 360 there a couple of weeks ago, like 3/4 of the last range has been made in the last 5 months. So quite incredible. But you do see this sort of those squarings quite often, probably 50% for the index, but some of the stocks can be like 61.8 here. So just notice there that last leg here. So from that mid 223 low up to the high there, this is a nice squaring here for this stock here. We've had some pretty good resistance at the 50 and the 38.2, but this leg here does sort of make up the sort of that 61.8% of that range there, which would be typically a good way to end. That's if you go back and look in retrospect at a lot of these stops and how highs come in, they do come in as a particular percentage of the range there. So often, whether that's half or 61.8. So that's just key levels to sort of keep an eye on there. So just seeing a really good fit here for a possible sort of top here. And we've gone to a clear new high, and we're trading at close to 20 times the NAB too, which is probably the highest multiple it's traded on in the last 20 years as well. So that, so it's not cheap here. Multiple's very, very high here. And we've seen CBA roll back. We've seen Bendigo, Bank of Queensland roll back after having some pretty good moves as well. So we've seen that the banks have started to have those big moves, but then they've started to roll off as well after having some of those big moves. So, this looks like a pretty good short to me.
Okay. I like the sound of that, and we'll see what unfolds. Those banks can get hit hard when they fall out of the market's love. Auckland International Airport, AIA, New Zealand focused, as the name says. You've traded this very well for many years now. Looking at the weekly chart, we've got sort of 3 copy and paste almost. We've got these downward supports in here.
But it does show you the market. Yeah, it does show you the market. That's real. I mean, that chart there just shows you what the market's been doing in the last few years for a lot of stocks. It's just going up and down, and then those ranges there. And then we saw that 24 just went marginally lower, like a false break, and then a pop back here. So we're definitely seeing that type of activity in the market here. So it doesn't always make sense, some of these moves up, the valuations we're seeing on the high side, but then we're also seeing stocks just kind of get relentless selling and just don't seem to get any momentum, and then look like they're on their knees, and then all of a sudden they reverse, and then they're having these sharp rallies here. So those rallies for those two coming out of those 2 October lows here, they've been pretty sharp rallies coming out of there. So it's interesting there. This is almost like a seasonal sort of thing with the stock here, October here. So we're almost in that window again here. So, just interesting here that we've started to poke our head through the top of that range again. So, but that chart really typifies the type of market we're currently in here. So we're seeing those big moves in these big wide ranges there.
That is a very interesting chart to look at. And if anyone wants to look at Gary's success with trading AIA, just search YouTube AIA, final market points. And you can see his trading history with it because it's been in this portfolio multiple times. The next one in this week's report, Vulcan Energy, a name you have brought up a few times before, and you've been looking at sort of this movement here where it's been coming down and then getting shorter and tighter with those movements. And surprise, surprise, it's broken out of that range. So what happens now?
Yeah, so it's popped out in pretty good volume there. So look, it's taken a little while to get out of here. Had a few false starts there, but yeah, we have had a pretty heavy volume bar here the last few weeks, and then probably those 4 or 5 big days out of that range were all pretty heavy volume. So that's a good sign. And just looking across the energy, the thing about this AI sort of stuff here is it's just it's energy heavy. So we're I think 12 to 18 months ago, Chris, we were all worried. Everyone was sort of just moving away from some of the dirty energy and just trying to there was a real sort of focus on the green and clean sort of energies, but at the moment no one's talking about clean and green energy anymore. There, it's
just give me the energy and give me a good price.
Yeah. Just there's energy is going to all forms there. I mean, we've seen we've basically got everyone looking at nuclear energy around the world. We've got governments backflipping, all across Europe, stuff there about with nuclear as well. So it's a big shift, but I think end of the day, whether you're clean or green or whether you're not so clean and green, I think it's going to be all hands on deck here. So I think Vulcan's in a bit more of that lithium space as well, and that sort of clean energy. But I think I think all hands on deck here. So I think this looks pretty interesting, but particularly the way it's sort of come out here as well.
Yeah, no, it's a great one. And I just scrolled up to really show the previous reports and the times where you'd entered those positions because you've been long. So the next one on the chart, Nuix, another name that you've talked about a few times before. Weekly chart, price action breaking out on very strong trading volumes. So really highlighting these volumes here. Yeah. And these massive wide candles on the green side of things. And then both of them closing above that rectangle that you've highlighted to show that they're really pushing through that ceiling that it's had after this big downtrend that was the best part of half a year. So what next for Nuix?
It's funny. I looked at this actually in April there, Chris, 'cause I thought this might have been one of the leaders that might recover. But then when I was looking at April, it didn't really come out that strong. It sort of stayed under the previous high, so it didn't sort of show the relative strength versus some of the other names there. So I never really got enthralled there. And I also did look at the valuation of Nuix as well. So looked at its revenue sort of sales compared to its valuation. It looked pretty heavy still, even though it had a fairly large pullback. So which goes to show you sometimes we know that the leaders of some bull markets, they're not going to lead the next bull markets there. So, or there can be a delay as well. We're seeing with sort of 360. It did probably get going. It sort of in the doldrums there for a while, and I think the market took off without it, but then it started to catch up, and then it started to show relative strength later on. So they can come in later on. So I just sort of noticed this one showing a few signs there of coming out of that base. And there was some pretty heavy volume there. But yeah, to be honest, what sort of struck me was with one of the issues with AI, and then just starting to learn a little bit more about it and read a bit more about it, was that with the AI and particularly the open AI, is it's based on the concerns around that integrity of the data, and just sure. I guess all those sort of things. It's ethical, that it's legal, that that the data is not manipulated, and so it's just that's going to be one of that was sort of in the last few weeks. That's sort of one of the issues that they're talking about with AI. So just when at the same time when I knew Exchange and Strength, I was sort of starting to read up about them, and that's their edge is that they do. Their core really is around that sort of platform-based data solutions there, but basically having the privacy around that data and just having that sort of potentially sort of strong, protected, reliable, ethical, sort of all those sort of concerns that the market has around data. That's their space. I thought that's actually pretty interesting. That's sort of, this is an area they obviously these things take a while to roll out, but the market will always look forward here. So just interesting. That's probably one of the biggest issues, which might lie, and that's really in new extra space there. So I just thought that was pretty interesting there, that the technicals are showing strength at the same time. Their little edge is what the market is searching for. So yeah, I thought this looks pretty interesting. You probably know all about it than I do, but yeah.
No, it's an amazing part of the market, and it definitely is the pointy end of what's happening in this revolutionary space and very quickly adapting space. But there's just a couple of final comments you've got in this week's report, which I'll share on screen. You have sort of talked about at the start, but some people really like to read that part of your report. And as we do, I'll highlight that, yes, you've done the 2025 blueprint. We'll put a link to that. We'll also put a link to a whole playlist of your reports, because you have talked about a few of these companies before, and those who want to go through the report and the table at the top to see and check back. So with that on screen and with these insights, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.